direct brain-computer interfaces, replacing organic hands with bionic hands, adding to the body a second immune system, which is not organic, but an inorganic immune system made up of millions of tiny nanorobots inside your body.
You never want a serious crisis to go to waste. And what I mean by that, it's an opportunity to do things that you think you could not do before.
It is basically biological chip that it is in the tablet. And once you take the tablet and dissolves into your stomach, sends a signal that you took the tablet. So imagine the applications of that, compliance. The insurance companies to know that the medicines that patients should take, they do take them. It is fascinating what happens in this field.
Positive uptrend. Can you talk about what's driving that sort of upward momentum and whether it can withstand some of the bad news that's still ahead?
Jordan, let's first start by talking about the bad news. I'm puzzled, aren't you? Crypto should not be rallying when you've had so much backdrop of bad news. You've got the SEC here filing lawsuits, 30 cases last year with huge fines. We're talking millions or tens of millions of dollars. The DOJ's out arresting everyone. Recently, a Russian national living in China was arrested, the CEO and founder of Bitrue. And then there are crypto layoffs throughout the entire sector. And we're not talking about tech layoffs where you see giant tech companies laying off 5%, 6% of the workforce. Luno, which is owned by DCG, just recently laid off 35%. Genesis at 30% and Silvergate at 40%. We've had 27,000 jobs laid off since April last year, according to CoinDesk. So this is a lot of bad news, and it's about to get worse in my view. You've got some major bankruptcies that we've seen, but the spotlight now is potentially on DCG and Genesis. And DCG, as people may know, owns Grayscale, and if the contagion spreads, you've got 600,000 plus potential Bitcoin that they hold that they may need to potentially liquidate. So a lot of bad news. It's very hard to make sense of this. But if you look at why crypto's rallying amidst this bad news, I think it comes down to two things, really. And the obvious interpretation is, look, it's tactical. It's been a good start to the year. All assets are up. They're finally behaving the way you expect them to behave, because we've had a very weird period the last few years with assets not correlating the way you expect them to. But you could say the market's reacting to interest rate expectations, and bizarrely that means cutting interest rates because we're going to have a weaker economy. So when you look at crypto, and let's take Bitcoin as an example, there's some correlation to the S&P 500, gold, and even the NASDAQ. It's up 40% year to date. We're looking at, the S&P at 6%, gold at 6%, so not that much correlation, but some. Where things get really interesting, though, in my view, is the story that crypto is full of speculators. And when you look at an index, and I'm an investor in ARK, Kathy Woods, her fund is up 26% year to date, and Bitcoin's up 40%. So there seems to be an obvious correlation here where crypto is correlated to high-tech growth, and maybe the argument is that speculators are finally back.
So
welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Bitcoin and cryptos bouncing off the lows. The month of January has been great for stocks and cryptos. But we know in these market conditions, we know for a fact crypto shouldn't be pumping. But we know when it comes to the Fed, we know they're always up to their tricks. And we know Janet Yellen and Gary Gensler are the chess pieces for the NWO. And we have Janet Yellen pulling off another magician trick that she pulled off in 2021. And remember in 2001 when they closed down the repo, she went into the general account and started pumping the market. Now she's back at it due to the debt ceiling crisis. So that's the reason why she came out all of a sudden and said, hey, we run out of money on Thursday. Because then it was their time to start the manipulation because they know they're going to be raising rates again. So this buys them more time so they can kick the can down the road for their next move. And remember, guys, we've never had this type of debt in history. And don't get me wrong, it's all fake paper, but we've never had this type of debt in history. And then on top of it, we're putting interest rates on that. So the only thing they're doing is that they're allowing Janet Yellen to break America. Now they're pulling from retirement accounts. Also, we know we're receiving no more remittances from the Fed, and then also draining the reserves. And nobody's going to want the United States paper when our back is against the wall. Remember, the NWO caused the problem, wait for the reaction, and run in with the solution. Remember, the top buyers of our paper was Japan and then also China. And we know all these countries are moving away from the dollar because we're going to have Bretton Woods 2.0. So, guys, you're witnessing the fall of America to Babylon along with the United States reserve currency and the rise of China, the dragon, along with the digital yuan, backed by that digital SDR. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Fed. So by doing quantitative easing, they add liquidity to the system. By doing quantitative tightening, they pull liquidity out of the system. But they're not the only variable. Another big variable is that the Treasury Department, can suck money into its cash balance. And when they do that, they're basically pulling money out of the system. It's kind of going into a void that's not really affecting anything. And when they draw down their cash balance, they're basically pushing that cash back out into the system. And the TGA, the Treasury General Account, peaked in mid-2022. And since then, it's actually been rolling down and offsetting a lot of the Fed quantitative tightening. And that's set to continue because one of the things that the Treasury does when they have a debt ceiling limitation, because they can't issue more debt, they can draw down their cash balance, that, among other things that they can do. And so right now that's happening. And so as long as the debt ceiling is not resolved, we're probably going to see an ongoing reduction in the Treasury General Account, which actually adds liquidity to the market and offsets the Fed's quantitative tightening. However, I have concerns that basically when they fix the debt ceiling, when they resolve it, when they're able to issue more bonds again, the Treasury is going to have to increase its cash account again and get back up to its baseline, which means they're essentially going to suck liquidity out of the system. And so if the Fed is still doing quantitative tightening at that time, that's kind of a double downward pressure on liquidity. And so I do think we're kind of in the clear for a few months now. But as we look in the second half of this year, whenever the debt ceiling is resolved, I would have pretty significant concerns about market liquidity all over again.
We're going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids' books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID 33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.